Good morning, traders. Welcome to the Flow Show. You have to excuse me today. I've got a bit of a coldy something, coughing and spluttering all day yesterday and again today. So if I do go silent, it's probably because I'm coughing my lung up behind the scenes. Anyway, morning to you. Morning to Kay. How you doing, mate?
Morning, mate. Yeah, all good, all good. So far, so good. We are surviving the whole central bank avalanche. And I hope you feel better soon, mate.
Yeah, thanks, mate. I think, yeah, that is the right sentiment. As long as you survive these events and don't do your account up on anything silly, then you live to trade another day. So that's the minimum we should hope for. Right, well, let's get cracking because there's tons to get through, as you could imagine. Right. Japan's economy is still not completely stable, says PM Kishida, and he will include measures to counter inflation alongside social measures to counter the declining population in his economic measures to be released next week. That's when we get whatever bazookas, arrows or other ammunition he decides he's going to fire at the situation. Chief Cabinet Secretary Matsuno out with a jaw boning, nothing untoward, the usual stuff. Important that FX moves stably, reflecting fundamentals, yada, yada, yada. No uptick in any rhetoric there. Quick data pop. New Zealand GDP coming in a little bit warmer than expected. If I can find it. There we go. Quarter 0.9%, a nice beat there. Same with the year-on-year number, a nice beat there. That has got a few commentators thinking that a hike might be floating near the table, let's call it that, next time the RBNZ come to meet. Central banks galore again this morning. The SNB surprised by keeping their rate unchanged at 1.75%. They say the significant tightening of policy over recent quarters is countering the remaining inflationary pressure from today's perspective. It cannot be ruled out that further tightening of monetary policy may become necessary to ensure price stability over the medium term. The sentiment really in their statement was about worries to growth. So even though their own CPI forecasts are still quite high, they are worried that the hikes thus far are putting some additional pressure onto the economy, and that's one of the main reasons for the pause, but like everyone else, keeping the door open. The Riksbank, they raised by 25 pips as expected, and they are going to intervene, hedge in FX. They're going to hedge their reserves by selling $8 billion worth versus Swedish krona and 2 billion worth of euros. This hedging will begin on the 25th of September and will run, I think it's 4 to 6 months or something like that, Kay?
Yeah, it's going to take a while.
Yeah. So
yeah, it's 4 to 6 months to do 10 billion. Call it $10 billion equivalent. That's not going to influence much, I would say, although the market, first of all, took it very, very well for the Stocky, sending the Stocky like over 1% higher. But in the meantime, we're already back to where we were before. Don't ask me exactly about the exact moves that we had, because, as I said, in our room, I was always looking at the Norwegian kroner when the Riksbank came out. So I've missed all those moves basically. But yeah, it did have an immediate impact when the news came out. Although I'm that surprised the market reacted that violently, because they already told us before that they were looking at this, right? But then on the second reading, saying that it would take such a long time, I compare it to what the Bank of Mexico did the other day, you know, with the currency hedging reduction. got a bit of panic in the market as it gets announced, and then as the market reads it again, if it really takes 4 to 6 months, I mean, the impact on a day-to-day basis is going to be negligible, right?
Yeah, wouldn't that make it pointless to one aspect? I mean, they're not going to do anything to halt
Psychological. I think it's psychological.
Who for them? Because it won't be for everyone else, I don't think.
I know. So if you take it to 6 months, that's going to be like an equivalent of $60 million a day or so, which is easily absorbable by a market, if that market is bearish on a currency, right?
Yeah, well, it remains to be seen how that transforms into a currency that we shall watch with interest. The Norges, they hiked rates by 25 pips to 4.25 as expected. They see one more rate hike, most probably in December. So they are potentially coming to their peak at the end of the year, giving themselves a bit of room in between, but they can pretty much kicked to December. Over to the ECB, and ECB's DeCoste said uncertainty about the economy and inflation is still high. Risks to inflation are now balanced. Keeping rates at 4% is consistent with the 2% price goal. ECB's Makhlouf said, my view at the moment is that March 2024 is probably too early for a first rate cut and that a further rate hike is possible. One of the hawks, ECB's Nagel, said the Eurozone inflation rate is not falling at a desired pace. Core inflation is still stubborn and it's not clear if rates have peaked. One of the hawks, ECB's Kazakhs, says the recent energy price rise poses upside risk to Eurozone inflation. Rate cuts expectations for the middle of 2024 are too early. The end of PEP and APP reinvestments should be discussed before rate cuts. Coming over to the BOE, and Deutsche Bank have joined a long list of those who have changed their forecast for the BOE today. They now see the BOE holding rates at 5.25. They expected a hike previously. They join Nomura, and I think it was I can't remember, Goldies or JP Morgan as well, who also flip-flopped on their call for a hike today to a pause. So that's going to be interesting when we see what those results are, see how those calls are getting on. On the data front, we had some borrowing data, government borrowing data, which pretty much came in lower than forecast. So a bit of surprise there. Public borrowing coming in lower overall. There's all tons of numbers there, but some, again, a lot of questions coming out about the OBR, the Office of Bodged Responsibility, that give some forecasts as to borrowing that, but we're still undercutting those forecasts. So the glass not as half empty as those lot made out. But nothing too much for the pound to worry about today amid the BOE. Over to the BOC, then their policy deliberations, minutes, whatever you want to call them, are out last night. Excuse me, said they're worried that holding rates steady would raise cut expectations. It's a little bit of a hawkish slant there. They didn't discuss a rate cut at the September meeting, and tighter policy should remain a potential option. So still a little bit more of a hawkish lean from the BOC of late. Over to his nibs at the FOMC. They kept rates unchanged at 5.25 to 5.50 as expected. And what we got was that shift up in the dots that we were looking for. They report nowadays a sort of medium average view of those. So for 2023, which is of little interest, they kept those at 5.6%. So this is the officials' medium view of the Fed funds rate at the end of this year. 5.6% is where they see the rate. So it still prices in another hike in those terms. 2024 jumped up. The median went to 5.1 from 4.6. So that was the big shift up we were warning about in the 2024 projections. 2025 got shifted up somewhat as well, 3.9% versus 3.4% previously. We also got the first 2026 numbers, which came in at 2.9%. That's an early look at the dots for that year, not too much of a concern at the moment. The longer run numbers stayed unchanged at 2.5%. This is an area I was looking at as a sort of a byline story to see if they would indicate about whether the neutral rate was coming up. And that was actually something that Powell mentioned in his comments, which I'll go through now. He said they're squarely focused on the dual mandate, and the dual mandate is stable prices and maximum employment, not growth, not anything else. Obviously, they look at it, but that's their mandate, stable prices and maximum employment. It says the Fed has covered a lot of ground, but yet to feel the full effects of prior hikes. We can proceed carefully and are in a position to proceed carefully on firming rates. The decisions are to be based on assessments of data and the risks. Real GDP growth has come in above expectations. Consumer spending particularly robust. Activity in housing has picked up, although maybe you didn't see the housing numbers earlier this week. Higher rates are weighing on business investment. Nominal wage growth has shown signs of easing. There's a long way to go in the process of reaching 2% inflation. They decided to hold rates in light of how far we've come. Holding rates does not mean we've reached the stance we seek, though. Must see progress before the Fed's ready to reach conclusion it's sufficiently restrictive. But on a further hike, wouldn't attribute a huge importance to one hike. And it's plausible that the neutral rate is higher than the longer run rate. That's that 2.5% I pointed out earlier. So pretty much, if you look through all the comments, it was usual, give with one hand, take with the other, one hand hawkish, one hand dovish, all the way through the presser. So giving reasons why they might hike and reasons why there's risks they won't. So pretty much another line walking performance by Powell, Kay.
Yeah, oh yeah, definitely. But it's what I was saying, and if we rewind a little bit what he was saying, or revisit what he was saying, it's one of those meetings. I thought it was somewhere a strange one. Okay, it's a hawkish hold, right? That is that's a fact. All the dots came up. They concentrated as well, which is adding to the hawkish side of it. But then, yeah, I think the market needs to again, and we are seeing it in what's happening in the dollar, in the yields, in the equity market. So that's one thing. On the other hand, I don't know, but there's several questions during the press conference where we did not really elaborate on stuff. He looks to be a little bit. He looked at times a little bit annoyed.
Yeah.
Albeit walking the fine line as he does. To me, there's two messages in there really, and so there's one clear one, because he continues to walk both sides of the risk spectrum, right? So there's the clear still data dependence, and then there's, I think, the second message in the dots, and what he then brought over during the press conference at times, was that don't start to bet against the higher for longer situation just as yet. So there's a couple of messages there that's been sent to markets, and really I think that is about it. It does not reduce the importance of data, because as he clearly said about the dual mandate on employment, we are still, and again, we are going to really closely have to watch what's going to happen with the jobs market going forward, right? We had those little pale orange flags in different numbers, but never had the red flag, right? So and the NFP reports and things that this showing some signs here and there, but never showed us that, okay, now the unemployment rate is starting to go over 4%. We are getting into negative growth of unemployment or so, of employment. We didn't have it yet. So he's really sending us to the real data, right?
Yeah.
And that, I think, is just the two messages that I at least kept from this meeting. And it's a bit strange that he seemed annoyed at some points, because he didn't. There's several questions where he did not elaborate at all on to the question, and so it's somewhere confirms to me that he was only wanted to convey two messages, and that is, don't fight the higher for longer yet, and we're completely data dependent, because as usual, and there's a pattern in his press conferences. I don't know if you as well noticed it. For several meetings now, he starts with the risk, the negative risks, and then he moves over gradually to a neutral and a bit more hawkish stance. And we've seen it in the market as well, the reaction in the market, and it seems to be a pattern. So for me, that's interesting as well, to start to monitor that very closely, especially for when they will start, and we may have to be very patient with that, but especially for when they will really start to be sending messages out that it's done and we are now looking at the other side, okay? And I reckon it's pretty important to note that little pattern that is keeping during the press conferences. So
yeah,
that is
we saw that with Macklem, and I think we've seen it with Lagarde at some points as well, where they start off. It depends on what message they want to convey. We start off hawkish, then go into the risks and the more bearish scenarios, but they finish on the hawkish note. So the market will.
And the thing is, there's a bit of differences in their pattern between Macklem, Lagarde, and Powell, perhaps, but it is, and I think, well, I mean, it's subtleties, but it will make the market move, right? When the pattern changes, or the wording to that thing changes. Like I assume that when Powell will go more dovish, that negative part of his press conference is going to last for a lot longer than it does now, because it really lasted for 3-4 minutes, and then he went over to more to the neutral side, and then perhaps rates in the long term need to be higher than expected and stuff. But it's a very interesting pattern, and but for the rest, really, I think two messages there, and that's how I'm viewing this meeting. Wasn't expected to hike, data dependent, and higher for longer, and that's it.
Yeah, I mean, it's been a bit of a surprise, because when I woke up this morning, you know, a lot of the headlines are saying, oh, you know, this higher for longer message. This higher for longer message has been there all the time. It's almost as if the market hasn't really been listening to it, and needed this shunt in the dots to finally nail that home. So, you know, those of you who've been watching the Flow show for long enough know we've been banging on about that message that central banks want to keep that in there, so that if they do come to the end of their hike cycle, the market doesn't undo all that work by getting overly dovish. But market's going to market for you, and we just trade what they do.
And the market always tries to fight whatever there is coming out of a central bank. That's the other thing. It's always like finding something wrong in something, but really, and that is something that I want to tell our audience as well, is that don't. I mean, it's not that you don't have to listen, because some people really talk very well about what's going on in central banks, and they understand it, but don't listen to or don't get too deep in stuff where everybody is trying to always counter what a central bank says. The facts are there. The central bank says something, that is where they stand at, and that is how we will trade it. The thing for me is, it doesn't even matter whether a central bank is right or wrong. That is food for tweets or X's and people writing stuff. That is not why we are in the market. We are in the market to say very simply, to make money, right? And
Yep.
it doesn't matter whether a central bank is right or wrong. And to me, the only thing that matters is there a trade in what they are saying. That's really the only thing that matters. To get to your trade, you have to form your bias and understand what's going on and understand a bit of fundamentals, and then the text, look at your levels and stuff. But it doesn't matter whether they are right or wrong. To me, not at all. I've been in the market for 40 years. If you think it matters if they are right or wrong, you are always going to counter trade. And that is usually not something where you really build your portfolio on.
Yeah. You know, they're the saying, don't fight a central bank, is there for a reason. If a central bank says it's going to do something, it's going to do something. Whatever consequences that may lead to, or you may think may lead to, is irrelevant. If that's what they're going to do, that's what they're going to do. Where you want to listen to the market is what it thinks the central bank is going to do. You know, we've seen it very clearly these last couple of weeks. You know, look at the ECB. The market was pricing a 30% chance of a hike the week before. By the time we got to the ECB, it was a 70% chance. And they got it right on that basis in the end. So you need to know, and we always say it, you need to know what the market is thinking, which way it is leaning going into a central bank, because that's where your trade is. The market thinks dovish and the central bank is hawkish. Well, that's the trade. And it's the same for the Bank of England today. You know, pretty much nailed on for a hike, 70-80% probability of a hike before the CPI data. Now we're running at 56-57%, pretty much 50-50 over whether they hike or hold. And so now you know the market's leaning. It's a coin flip. On balance, the Bank of England should be hiking. They've signalled it long enough that another hike is possible, and enough Bank of England members have touted this meeting as a potential hike. So you've got to side with the central bank. The risk is still if they don't hike, which will play into, you know, what the market's thinking. But there's also it's a bit more balanced now. So you might see a reaction on both sides, whether they hike or hold. Whereas if a market is heavily one side, the price risk is the other side. So anyway, Bank of England, let's get stuck into it. So there's several things to consider here. Right. First and foremost, do they hike or do they not? Okay, we won't know until the number drops. The large, economists still saying that they hike 25 pips. The votes are going to be important, and already I'm seeing a bit of divergence here. This calendar has the votes at 7-2 in favour of a hike. Looking at Reuters, it's 8-1, the same as last month. Now, again, it's all about messages. We're still in the same boat. If they hike now, they're likely done, okay? And then the market's probably going to do a similar thing to the ECB. You might get a knee-jerk higher in the quid, and then maybe it reverses because, on balance, the BOE isn't going to be uber hawkish if they're pausing on rates. On the flip side, if they hold, then I expect it to be sounding like a bit of a hawkish hold, because they'll keep the message in there that they are going to keep hikes on the table just in case there's any risks down the line. So we're in the same boat as we were last time. What is important with this is these votes, okay? In theory, if they are going to hike, it should be 8-1, because they should all be agreeing it. If they're going to hike, then hike away, and they should all agree to it in the same number. You've obviously got this one dove who's been a dove forever. But what they can do here is they can send a message about that hike as well. If they hike and it's a more balanced vote, and I think something like 6-3 or maybe an extreme 5-4, which would be a more even vote, they will reinforce the hold, okay? Because now there's more members saying keep rates unchanged. So that will enforce the one and done, okay? Now an 8-1 vote might be construed a bit more hawkish, okay? Now on the flip side, If they hold, okay, it might be a close vote as well. It might be something like a 5-4, because again, they'll want to keep that message that there are still people who want them to hike rates. So that will enforce the hawkish hold side of things. So there's no press conference today, no economic forecast, nothing. It's just going to be a straight drop and the statement and what they think about it. So you really got to juggle up what to do in this one. Now, for the quid, we were having this conversation in the room, and it could be a bit messy. I think cable is a complete wild card in all this. Okay, I'm probably not going to touch it. Okay, I really don't know what this is going to do. Is it going to bust lower and carry on going, or is it going to pop up and hold or go high? I really don't know. I think there's better value trades in the crosses. And I know this is Kay's thoughts as well, and we'll get his input as well. So maybe look at something like euro sterling, which is obviously a bit more of a slower moving beast. So you have a bit of time to maneuver in this one than you would perhaps in cable. Even pound yen, which you can look at from the BOJ perspective as well. You know, if this craps out, it might be worth having a little tinkle in case, as expected, the BOJ stay unchanged and maybe Ueda goes back on his comments. If that's the case, you're going to see all yen pairs rallying. So this might be one you want to look at rather than cable, because I think cable's just a bit messier. So that's my thoughts. I'm already in euro sterling, as you know. I'm already long. If I get a decent dip, I might add to my back to the position. But I'm happy to stay long there, short sterling on that cross there. And I may have a look at Guppy if it gives a decent move. Kay, what are your thoughts?
Yeah, I mean, I agree with you on the votes, of course. That's going to be. It's the votes in the BOE. You can compare it to the dots at the FOMC. Is not completely the same, of course, but it is giving a hint at who is leading which way. The closer the vote, I don't want to look too far in front, as you say. Like if they hold and it's tight, I think if they hold, it's going to be tight per definition, because there's still people wanting to be. If they hold, then it's I think sterling really gets hammered in the same at the time of the announcement, and then we need to reflect on where we are. If they hike, the tighter the vote, the less the market is going to like it, and likely going to hammer the sterling as well. But we always look, and that's where we were talking about, like, whatever possibilities there are. When we look at something, and if people sometimes read or listen to what big investors are saying, and you can just take the big two, you know, Paul Tudor Jones and Ray Dalio, the guys who really hammer the market regularly and who have like an absolutely monster track record. They always look, and I'm doing the same thing. They always look at what can go wrong, what can be wrong in my assumption that is going to happen. So I think if it's tight, yes, sterling gets hammered, and then do they hike or not? If they hike, of course they are going to be probably done. If it's like a 5-4 vote, even a 6-3 would already be. But I think the market is relatively expecting that. So it really would have to be a 5-4 to really send sterling lower, I think. But if they hike, we should think about something, is that if they hike, that's going to be a 5.5% currency. And if you look at the majors, that is the top end of the Fed funds rate. That is higher than the ECB. It's much higher than stuff like the yen and the Swiss, for instance. It's going to be roughly the same as the Kiwi. I think Kiwi is at 5.5, but higher than still higher than the Aussie. I know we are already at that level, but if you had another 0.25%, there may be some funding just coming into consideration, and people saying like, well, do we really want to send sterling a lot lower, not knowing what the next set of data is going to tell us? Because let's face it, the sterling cable has been hammered on two things. surprisingly lower inflation in the UK, but that is still volatile in one thing. And then the hawkish hold of the FOMC yesterday. But now I'm not saying ball in the center 1-1 and we start the game again. No, I mean really sterling is feeling weak. If you look at the euro sterling and cable and the sterling yen, but there is always this little risk that the market goes too short sterling, being a 5.5% currency now, and we get a spike back higher. So that is something that I'm really cautious about going into the Bank of England today. Yes, base case to me is still, and also the other side of the pair. If you look at the cable, the dollar is still well bid. Suffice to look at the US interest rates, for instance, and even the EU interest rates are also rising. So that makes sterling a little unattractive after that CPI. But we have to look at everything, okay? So I'm going to be very cautious. Played it on the short side in the cable, done me a load of good overnight as well. But I've taken most of the profit out and only keep a very small position short in the sterling, because I do not want to dismiss every eventuality. And if we get a real shakeout of cable today, I might just take it back and perhaps look at something else in the sterling. And as we've already been saying, if it's we have to look at what the Bank of Japan and perhaps that brings us to the Bank of Japan then a little later will be doing. Yeah. But stuff like sterling yen may bottom out. Stuff like sterling Swiss may bottom out, for instance, and that in turn may actually put a little bit under the cable if people start to think about that. So just keeping every possibility open on this one. It may get a little messy over the Bank of England.
Yeah, and GUP is pretty much in the same situation as dollar yen, where it's going to cost you to sit in shorts for too long. So you know that's the factor you're highlighting there with the carry as well, and why it would encourage more people to be long. So yeah, I think this one is a good one to look at to run into the Bank of Japan potentially if you get a decent dip. Because then you're going to be on the right side potentially for the Bank of Japan, who aren't going to change anything at this meeting. And the only risk is if they do change a bit of language. And on that, I'm not too sure about. But it is a risk nonetheless. But so is any pair you trade. So it's all about managing your risk as you get in. Horatio asks, can a hawkish hold support the pound significantly? Or would it give a better opportunity to short at better levels? Again, it depends on what you want to short it against. You know, if you want to short it against the yen, well, you face the risk of the BOJ staying on easy street. You know, that's why I like euro sterling. It's not costing you a lot. Yeah, there's a bit of divergence between the two interest rate jurisdictions, but it's not a massive cost. And there's less volatility in it, so you can play a bit of a longer game there. If you're just looking for a smash and grab trade, then yeah, you can go with your cables and everything else. So I don't see any scenario where we get a huge move either side that's not just a knee jerk. For example, you know, I can't see us dropping 300 pips in cable. But what I would say about cable, if you look at the longer term chart, we've had 9 months of it going nothing but up, and now we've got just over 2 months of it going nothing but down. So it doesn't, something like cable isn't really following all the fundamental moves. You know, when it goes, it goes. It's either going up or it's either going down. You know, you compare that to all these moves that have happened since September, you know, big old moves. Even the move down has been big. You look at euro sterling over the same period, and you know, outside the spikes, you know, we've sat in a 200-300 pip range. You know, so this is why you can take out the volatility. So cable can move, obviously. Will it change this trend? I don't know. Will it add to it? I don't know. Cable's going to go where cable's going to go. So it's up to you where you want to get in. Yeah, obviously you can still short, irrespective of the cost, you can still short currency. For the moment, you'd have to side with being the short side of the pound generally. So if you do get a decent pop, you know where the levels are. We got 124.50, we got 125, 125 and a half. You know, and just see what's developing here. We've got a bit of a development around 123.50 now. So the half numbers and the big figures are what you're going to be looking at. But yeah, you want to be looking at smash and grab at the moment for these. Right. So that's the Bank of England out of the way. What about the Bank of Japan? I'll keep it fairly brief, as I've already pretty much mentioned my thoughts. No change to policy at all. And really the only important factor is what Ueda does or says about his prior comments. I think the bigger risk is that he dials them down a bit, pushes back a little bit over how the market interpreted them last time, which is going to lead to yen weakness. The risk, the big price risk, is if he says, no, I meant what I said. We're looking at ending negative rates by the end of the year, fiscal calendar or otherwise. And there is a possibility. And then the market is going to be buying yen on that again. But I think that's the low risk nevertheless. Your thoughts, Kay?
Well, as usual, there's people expecting, well, half expecting that they may actually do something over the week meeting, but all the comments that we had from the Japanese officials were, we are going to wait until we see what's happening with data, especially wages and et cetera, et cetera. So base case is they don't do anything, and then it's all about wording. Now, there could be a case where he says that we have relaxed the rules on the YCC, and if you look at the JGBs, they're gradually ticking up. Yeah, we are at 76 BPs right now in the tens. I would expect that to continue to gradually grind higher, also because the rest of the yields are rising elsewhere. But then it's going to be exactly what Ryan said. We need, and he should, explain what he said about a week or so ago, and especially regarding the interest rates, not only YCC, but regarding the interest rates. And if he gives us anything to rely on for when he thinks that interest rates are going to move out of negative territory, because they're still at minus 10 BPs, the official interest rate. So he may give us a hint. Some banks are calling that he may actually put them to zero and send a message to the market overnight on okay, we started to normalize now. But it's not the base case. If that would happen, then I reckon we find dollar yen, just to name the major pair, we find dollar yen 200 points lower after the Bank of Japan meeting. But if he doesn't give us anything, then it's got 150 written all over it, right? The thing, what I think the most plausible scenario is now is that the yen is likely going to maybe see a bit of a bid coming in because of the uncertainty of what he could be saying, and if he really clarifies and tell the markets that we are not far from moving on interest rates. So I can see a little bit of yen strength perhaps today, perhaps. But then it's all over to the Bank of Japan. If he doesn't say anything, then we are going to have the same scenario as we had over the July meeting, and that we print a low into and over the Bank of Japan meeting, and then afterwards we just take the other way. That is sort of what I would expect as a base case that is going to happen, especially if you look at the dollar being bid versus most currencies right now. So base case is a little bit of speculation into the meeting, bit of book handling, managing, could drive the yen a little stronger over the day, and then really open question. but base case is that once the meeting is over, we're going to take the other side again, and the yen to weaken again.
I'm also wondering if this is going to be a bit of a can kick, because Kishida's going to be unveiling all those measures next week, and we'll get numbers on them, and what it's going to cost, and that's what they may have to borrow, and that's what rates they may be borrowing at.
Yeah.
Do you think that's going to be a consideration for the Bank of Japan?
I am 100% convinced that is why it's all going so slow. And you know my view. I've been repeating it like an old record. I think that first line when he took over from Kuroda, between them and between him and the government saying that they are going to closely work together, I think that killed all expectations for them to move really rapidly. Trapped? Yeah, the market can perceive it like that. Sponsoring government finances? Definitely. Those guys are in MMT since 10 years already, since the big quake. And that is still what holds me back from even considering of buying yen for a longer term, is because it's going to go so slow. So it's really going to be a case. Is he going to surprise us at one day moving those rates? Possible. But my case is still that for me to start to buy yen anytime is that the rest of the world falls apart around it, and that we get global recessions, especially in the US. Europe is not far from it. Sterling, UK can get into one as well. China is likely in one, but they will never show it. So, I mean, if the rest of the world falls apart around Japan, then it's probably time to buy yen outside of Bank of Japan considerations. But for the rest, I think it's going to still be a slow process, just because of the cooperation between the Bank of Japan and the government. Yeah. Prove me wrong, Mr. Ueda. Prove me wrong.
Well, even if it does, we can still make money from it. So that's a good thing about being a trader. Yeah. Well, speaking of dollar yen, we've had this break again, breakette, let's call it. It did start yesterday, getting up, getting up through this heavy resistance zone and cracking through 148. Then obviously we had a secondary move, which got up to a level which was just one of the prior highs off that area when we were up at the 152s. But it's washing out a bit again. We're seeing a bit of a pattern going on, just as Kay said, coming into these next risk events, people taking a bit of money off the table. We need to watch this level, obviously. It's important, but it's not important right now because market positioning and the BOJ is more important. So I wouldn't pay that much attention to it. After the BOJ, depending on where we are, it could be important again. If we're, up at 149, it's going to be a really important support point. If we're back below 148, down towards 147s, it's going to be a big resistance point again. So it may not mean nothing now, but it may mean something later. Now over the Fed, I got rid of my 147.60s trade just before the announcement. I didn't want that risk in the middle there. I would have come really close to getting stopped at 45 on that portion anyway. So I've just kept my 147s. I'm happy to hold those for now. Got a bit of margin in the trade. I'll see where that position lies going into the BOJ. If we're down, low 147s, I might think about chopping it in, just take the risk off the table and seeing what happens after the Bank of Japan. If we're still up here, I'll lock in my stop, probably around about break even or a bit higher, and just see what happens, and maybe we go higher. For the euro dollar, well, it looks like it's stopped going down. It's had its initial reaction over the Fed. It hasn't really followed through. So it's looking a bit similar to this move when we had the break. Couldn't get any lower, had a bit of a bounce. The lines are pretty obvious. We're just got close to that fib, that 38.2 fib. So that's probably set a bit of a marker there. As you can see, it's quite a long-term fib, that one, going all the way back to last year. So it could be a bit of a significant level. 107 is still the important level up above, and then just watch your bits and pieces in between. So again, this needs to follow on. If it doesn't follow on through these lows and through 106, then maybe we are going to have a bit of a bottom put in place. Doesn't mean we're going to rocket higher, but it could mean, you know, at least a move back up through 107, maybe even up to this zone 108. So I know Dale's looking for a potential ping back up to maybe 109, somewhere like that, which is possible. All these events, all these central banks, it's important where we're going to finish the week, because that will set us up for how excuse me, for how we go forward. Dollar CAD, this was another one. I folded my longs, the balance of my longs yesterday, because into the Fed we were trading around the low 134s, and again I didn't want the risk. Not the greatest move, but you know, you can only make the decision you do at the time. We tapped that 134 90s 95s again over the Fed, and it's been north all the way after that, just looking like we might want to get back through 135. All this portion now, there's a couple of things. Obviously got the Fed and this higher for longer hawkish note that everyone's jumping on, but also oil has turned around a bit as well. So two of those pressures that were pulling dollar CAD lower have now abated, shall we say. So it's less reason why that should continue going lower. What I would say though is that the FA.C.E reasons why CAD should get a bit stronger still remain. So I'm not sure how far this runs. Definitely if we get back up you know, towards 136s, up towards these highs, I will be thinking about reinstating shorts again just for a FA.C play. But for now, I'm not on anything, and I'm just going to sit and watch what happens with this one. Okay, do you want to grab a couple?
Yeah, just a couple, mate. I must say, I don't really have the same view on those Bank of Canada minutes, because to me, saying that they did not want to mention cuts, so not to send the wrong message, is actually not hawkish to me. But okay, we leave that in the middle. In the meantime, just to continue on the CAD, I took mine off as well. We were all like, it was kind of a group play, a team play. For the people who were in the Forex Analytics community, they know a fair few of us have been long dollar CAD, grabbing off that low 134 or sub 134, and I'm pretty happy that I've been done on the take profit just ahead of 135, the figure this morning, and I don't have anything in there anymore either. I'm not sure what's going to happen, but when I look at energy, for instance, I'm rather tempted to buy dips now in dollar Canada. Still, if we get a decent dip somewhere. Just want to remind you, and as Ryan already mentioned, this where we are going to close the week, this euro dollar, right? We're back, and it goes even back to 2020. Ryan has this 38.2, and it's a 38.2 of quite a few moves. If you look at the move down from 123 to the lows, and then from the lows to the 112s, low 106s are really where the euro dollar is going to have to make a decision, and that's going to tell us perhaps tomorrow, because I think tomorrow we've got European PMIs as well, right?
Yeah, the flash numbers kick off.
Okay, here we
no
go.
End of the events.
Yeah, that's going to be adding a bit of spice to what's happening in the euro dollar. And then for the rest, I think it's built enough, never enough, but it's built decent resistances yesterday on the management of the books ahead of the FOMC, when we saw the dollar getting hammered a little bit, and now we are back to we held it in the Asian session, and that is important enough to me. So now this is really going to be decision time for the euro dollar around 106, because if that goes, then we are probably going to see a quick move back down to 105, 104.90, and why not even to the 50% of the latest move into of the medium-term move into low 104s. So that for the euro dollar. I really think we need to start closing above 107.30-35 to get more neutral. And if we start to get back above 108 here, this zone here, that is going to be needed in the more medium term to flip the euro around. Question from Ali. Why is the euro holding up? Crosses. There's only one word there, and that's crosses. If you look at euro sterling, if you look at stuff like euro Aussie, for instance, I didn't even update my my screen, but look at the euro Aussie. Really sharp rally from another probe to the lows yesterday. If you look at stuff like yeah, as I already said, like euro sterling is pushing through. So I think it's just crosses on that holding up the euro dollar, and the relative, let's call it the relative still stable and hawkishness of Lagarde and Nagel was out again this morning. So that's going to be all of those things are in consideration. And look what happened. This is the short-term differentials. Even with euro, the short end rallying again after the FOMC, differentials are actually small tighter this morning. So that also is holding up the euro, if you look for reasons. And the rest, I think, is really because of that big technical level that we have in the low 106s in the euro dollar. Cable, to me, for the short term at least, is going to be relatively easy. Close or decisive move today is going to all depend on what's happening around 123.10, 20, 123 a figure. Figure 20 is really where the whole thing is going to be decided today. 123 figure 20. Stay below, then we are on our way, I think, to 121.80 minimum. If we manage to start closing the day above 123, then I would say that be careful, because there could be a little bit of a squeeze up to 124.5. Okay, I'm about to just go flat on the cable and see what the Bank of England brings, because I don't want to get caught up in too much of a stupid move. And the risk here is that the market may be a bit too bearish, although I'm still bearish, but it's always like the market always looks the most offered at the bottom and the most bid at the top, right? So I think there's a little bit of a risk. Okay, so that's why I'm just going to and I'm doing it right now. Actually, I'm just going flat on the cable and over to the Bank of England. That's basic. Oh yeah, Bank of Japan. I think here this 147 and a quarter. Look where we are compared to this one after the Bank of Japan. And again, I'm not ruling out that even into the Bank of Japan we might actually come and rest on this level, just because the uncertainty and because of the move that we saw pop here. This move, okay, this was a lot no, this one a lot bigger, of course, but I wouldn't be surprised that the market, yeah, you know, there's always a risk of this or that, and then we get similar move afterwards. Okay, so that is it. I'm if after the Bank of Japan, if they don't do anything, watch 148.80 and then 150. Okay, and I'm going to leave it there, Ryan.
Yeah.
There's a lot to talk about gold and silver and stuff, but I mean, we've already talked for quite a while.
Yeah, and you know, people can always come and join us in the chat room if they want to talk in greater length and at their leisure, or else come and see us on F.A.C.E. Anyway, trade safe over the Bank of England, the Bank of Japan, the data, everything else, geopolitics, you name it. We crack on and it continues. Hope you have a good day today. Thank you very much, Kay, and we shall see you all tomorrow to go over what has happened. Have a good one.